Hi everyone and welcome back to the channel. If you're new here, I'm PPE and this is the Peso Pro episodes where we talk about money management tips and peso tricks. Today, our topic is all about figuring out how many bank accounts or accounts do you need to manage your life, and I'm gonna share with you the best practices. This will be a baseline idea of what you need in order for you to have a working money system. If you haven't watched the first video in this installment series, I highly suggest you watch that after this video because there, we're talking about the fundamental things that you have to prepare so that you're able to understand your money better. Obviously, all of us will have unique needs and are in different proficiency levels kung gaano tayo kagaling with managing multiple bank accounts, for example. What we're gonna discuss today is the baseline para ma-manage nyo yung pera nyo and to be able to have the right accounts for the right types of transactions so that you can maximize the amount of money that you have. If you have new ideas or have discovered other products that I don't cover in the video, I'd be happy to learn from you, and please comment that in the comment section below so that everyone can learn from what you've learned. So, one of the most common questions that are asked in groups or even by my friends is, how many accounts do you have to maintain? And what types of accounts are those? For now, we're gonna assume that all of your purchases are paid via a debit card or cash. So let's start. The first account that you must have is your expense account. This account will be the bank account that you will use for your day-to-day expenses. For most of us who are working, this is actually already your payroll account, which means that this is the place where your pay or your sueldo is credited to every month or every 2 weeks, whatever the timing is. If you already have this account, good. This account should have a debit card attached to it so that you can pay for your transactions using debit card where it's accepted, and you can withdraw cash from the ATMs. From an interest rate standpoint, to me, my personal advice is for your expense account, it really doesn't matter. And the reason why it doesn't matter is because this account should have no major balance on it and it shouldn't stay there for a long time. Again, remember, this account is specifically for the transactions that you have for that specific month. Meaning, pag pumasok yung sweldo mo, lalabas lang din siya within the month, which means that even when we compute the weighted average daily balance, it will be very, very small. So stop arguing with yourself or trying to figure out where to put it in. The most important benefit here is that it's the most convenient account for you. In most cases, this is already your payroll because nandyan na siya. If you don't have payroll directly deposited into your bank account, then what you can do is to try to find the bank that will be closest to your place of residence or place of work so that it's easier for you to transact with the bank. And as long as that bank has a good online app or digital app, you'll be able to pay your bills from that bank as well. The big traditional banks will be good places to start. The second type of account that you should have is the emergency fund account. If you haven't watched the 8 Pro Steps video, we'll link to that here so that you can check that and assess for yourself where you are in the process of creating and achieving financial independence. The emergency fund is a set of funds that you set aside for emergency cases, which means this should be kept in a relatively safe account, but also that account should be accessible when there is an emergency. Ideally, this account has high interest rates and the cash can be withdrawn immediately or maybe up to a max of 1 day. The good contenders for this account will be the digital banks. The reason for that is because the emergency fund is designed to stay there for a long period of time, hopefully without any emergencies that pop up. The goal is for this money not to really earn a lot, but to just stay there as a just-in-case fund. So, with the digital banks offering anywhere between 2.5 to 4% per annum, they actually make good options for emergency fund because they already give you a decent amount of return and they're also very accessible. Some of them will have a debit card attached to them so that you can withdraw them from any ATM, or some of them will have interbank transfers that will allow you to get the money within the next day. The best options for this would be your GSave in partnership with CIMB or their own UpSave account, or it can be ING, Como, or Discartec. The third type of account that you need to have will be an account for savings. Now, for savings, these are not your investment accounts. When I talk about savings, these can be for near-term or short-term savings, which means, for example, if you're saving up for a vacation in the next 6 months, or if you're saving up for a major purchase of an appliance in the next 6 to 12 months, typically you wouldn't invest that money, but you want that money separate from your expense account. This is where typically people fail because they do not have this as a separate part of their accounts. In the savings accounts, you will need to identify the specific purpose and have this in a savings account that is easy to maintain and easy to transfer to. The important thing about your savings account is that this account should be easily transferred into so that you can make your regular payments of whatever you're trying to save, and these should be ideally very hard to withdraw from. As a good example, in my case, if I'm saving for something big or something major that I'm planning for, I actually create an account in a separate bank so that it's harder for me to withdraw that money. Having another account in the same bank with online access to its ATM makes it very easy to transfer funds within. So it's a bit difficult to keep self-control so that you don't spend that money because you see that balance every time you open your main bank. Another good option would be opening another account with the digital banks. The good thing is that these are separate from your expense account, so you don't mingle those two together, but they're safely kept in a savings account because at least for the next 6 months or 12 months that you need it, you're able to accumulate by transferring money over to that account. Again, this one is entirely up to you. If you ask me, if you're saving for something in the next month or 2 months and that's it, you ideally won't need another savings account. You may actually just use the envelope method and just put cash in it and stash it somewhere where it's safe and something that you don't see every day. However, with the rise of digital banks and application being very simple as just going into an app and doing the process end to end, it also may merit that you just create another account in one of those banks. Most notable will be Union Bank's online processing process, which takes very few steps and like only a couple of minutes to create an account. I was able to open mine in less than 20 minutes. The last type of account that you need to have would be investment accounts. Now, for those of you who are still in steps 1, 2, 3, and 4, this may not be very applicable yet. For those, however, who are in step 5, thinking about investments and trying to make sure that the money is working for them, this is a good step forward. In investments, there are a lot of different assets that you can choose from. If you haven't watched this video that we created on the choices of investment assets, this is a good next video to watch right after this. Investments come in different shapes and forms, and also from different institutions, so this can be a bit tricky. I highly suggest opening a stock brokerage account with your local bank, which, for example, if you have BPI, you can open one with BPI Trade, or if you have a BDO account, you can open an account with BDO Nomura, or you can open one with Call Financial because they also have fund transfer capabilities from the major banks. If you have mutual funds with other banks or other institutions, then that's another account that you have to maintain. Take, for example, Phil Equity. If you have a mutual fund with Phil Equity, you will need to create an account with them so that you can invest into their funds. But some of these accounts also can have automatic transfers from your BDO or BPI account. Separately, if you want to invest in alternative investments like Pag-ibig's MP2 voluntary savings program or in your company cooperative, then you would need to create a few other accounts for those investment types. The investment accounts will really vary based on what you need and what investments are you choosing to put money into. So the goal here is to identify the right investment asset first and then figure out the right institution who can cater to you best. For me, the best ones will be the most reliable and the ones that are established, but also the ones who will be able to facilitate the transaction that you will have moving forward. Again, remember, investments are a long-term thing, which means automation and you having an easy way to put money into the investment account takes one less barrier for you to actually make your investment work in the long term. If it's very hard for you to deposit an amount in your investment account, the chances are you will be lazy enough not to just put anything there at all, which is defeating the purpose. As a final pro tip, some of the expenses are actually not manageable with your expense account. Say for example, you may have an account with a bank and it doesn't have the bills payment feature for your credit card. A good way to augment your expense account would be to use an e-wallet. For me, for example, my main bank is BPI, and BPI currently doesn't have a bills payment facility to East-West credit cards. The way I manage this so that I don't have to line up every month to pay for my East-West credit card balance is for me to actually move money into my GCash e-wallet, and then I use GCash's bills pay feature so that I pay East-West through that. It takes a couple more steps, but at least that's much more simpler than lining up at the bank. There are different accounts for different objectives. And especially as we set up our money management system, the most important thing is that these accounts actually support your goals and support your activities. Personally, I wouldn't suggest going after all banks that are giving 0.10 interest difference here and there, or maybe even giving a one-time 200 pesos joining bonus, because that will probably make you confused if you don't have the money management basics set up in place. For those who are advanced in managing their money management system, by all means take advantage of these promotions. They're good value, they're free money, because these banks are most likely in the promotion stage. However, for those who are starting out, I would suggest starting with a few basic banks and accounts so that you are set up for success. So all in all, as part of the basic setup, you need 3 accounts plus whatever investment accounts that you need. The big money mistake is that you lump these accounts together, and so the lines are blurred as to what function each peso is doing. You're confused, or at least your mental psyche is confused on, do you have enough money or you actually are spending way beyond for a specific purpose at the expense of the other. I hope this was of value. I'll see you again in the next one.